Nvidia's CEO just stated the world is on the cusp of making everything that moves robotic, and it is just around the corner. Then the always humble Elon Musk says demand for robots will be insatiable and has said Tesla will produce 1 million Optimus robots a year by 2030, accounting for 80% of the company's long-term $30 trillion valuation. And just think about that for a second. 80% of a $30 trillion valuation would be $24 trillion. If shares of Tesla trade for 16.9 times on a price-to-sales valuation as they do now, that $24 trillion in stock value would have to mean around $1.4 trillion in annual sales from robotics alone. Now, it might be easy to write that off as Musk just being his usual overpromise, underdeliver. Hell, he said he'd be shocked if they didn't have full self-driving in 2022, 7 years after promising it within the next 2 years. We hear all these promises about robotics, how they are going to revolutionize our lives and make investors rich, only to be followed by epic fails like this. We are clearly not in danger of being replaced. Well, maybe the exotic dancers should be worried, because that is hot. But I'm about to show you detailed research, a massive report by Morgan Stanley that estimates the market for humanoid robotics at $5 trillion a year. $5 trillion in sales. If a company captures just 2% of that market, that is $100 billion in revenue every year. At that price-to-sales multiple we saw on Tesla, that is a $1.7 trillion company, all from just 2% of the industry. This market will create trillion-dollar companies, and investors will become rich. I'm going to show you that research, how robotics will change our lives over the next 4 years, and then highlight the 7 stocks to buy right now to be ready. We're going to start here with this massive, in-depth research report from Morgan Stanley, the work of 23 analysts, economists, and researchers, mapping out the future of robotics and culminating in its Humanoids Tech 25, highlighting the key investments in that robotic story. And while we've been promised the easy life of robotics since the Jetsons more than 60 years ago, the critical inflection point here has been artificial intelligence, making robotic development possible and then speeding up the evolution and then bringing that production cost down to the point where anyone can own these. The basic cost to a humanoid robot are forecast to come down from $130,000 this year to less than half that by 2032, and then under $40,000 within a decade. That's going to see an exponential increase in the number of robots sold, eventually to over 200 million a year. That is going to create a $5 trillion market with over 1 billion humanoid robots deployed over the next 25 years. That is 1 robot to every 10 humans, and likely a robot in every family in many countries. And before I show you that research and reveal the stocks to buy in this theme, I need you to understand how this investment is going to play out. Even on the most optimistic timelines, we're not going from this, which is undeniably adorable, even if a little impractical, to a fully functional Autobots in the next couple of years. Even some of the robotic makers are saying, hey, slow your roll here on the hype. These are not stocks to buy and then expect to get rich by next Tuesday. These stocks are going to follow that robotic hype cycle, the news and new developments up and down. They may rise or fall over the next year, but if you want a 10x investment, a stock that, yes, can truly make you rich, these are the ones that are going to do it, if you have the patience to hold on. And while there will be near-term ups and downs and risks to this, the trend is going to be unstoppable. Analysts estimate the payback period for robots is going to be just 2 years by 2030, making it economically viable for companies to go all in. By that time, robots are going to be working in manufacturing on 24-hour schedules at just $7.70 an hour, less than half the minimum wage. From there, the cost falls to just $2.60 per hour by 2050, and that's just a base case that could be conservative if AI accelerates that development. The team draws a strong correlation between economic growth and productivity, showing that an AI-powered productivity boom could take the economy to as high as $82 trillion by 2042, nearly 3 times the size of today's economy. Most of this Morgan Stanley report focuses on the semiconductors, the vision, and the sensing components of robotics, with the semiconductor market alone, the brains of the robots, growing to over $305 billion market. So just like that AI theme so far has been based on the picks and shovels plays on the data center buildout, so not the return on actual AI use software just yet, but the hardware makers like Nvidia and Broadcom. That first boom in robotics is going to be those component producers. In the vision components, that's going to be the hardware and the software that allows the robot to see, interpret, and process visual information. The high-res cameras with high bandwidth and low latency with advanced DSPs. In the brains, those semiconductors, it's the edge computing and ASIC chips that's going to allow the robot to make those split-second decisions without relying on a data center or a network. And then in that sensing technology, it's going to be the analog chips that will be central to perception of the world, along with body technology like actuators, batteries, energy storage, and material sciences. From all this, the team put together the top stocks list for robotics, the Humanoid Tech 25, with the value chain for brain, vision, and sensing technology. Now I'm going to take you through my favorites here, but you're going to notice that many of these aren't traded on the US exchanges. 9 of the stocks here are only sold in the Asian markets: China, Hong Kong, Japan, and Korea. Another 3 here are sold in the EU markets, while 13 are available on the US exchanges, including a few that are those foreign companies listed as ADRs. Now I'm going to highlight some of the US stocks here, but then show you how to get easy one-stop exposure to all these stocks, even the ones traded in other markets. And just like within that report, I want to focus here on the semiconductor side of this market. A total addressable market analyst forecast to $305 billion by 2045. Now understand, that is just the demand from humanoid robots, over and beyond the semiconductor demand for other robotics, electronics, and then that massive AI data center buildout. So what we have here is just a part of the robotic supply chain that is going to continue to see strong demand, not just as those robot dreams develop, but on every tech theme of the 21st century. It is the stocks in this industry that are going to grow whether the robot revolution is on schedule or not. Here, the research highlights something I pointed out 2 weeks ago: the different types of semiconductor chips that are going to make all this possible, and the coming chip wars as Nvidia's GPUs see competition from those accelerators, the FPGAs, and the ASIC chips. Nation, this is hugely important because it's going to mean that the AI theme isn't just one company anymore, but a few that can dominate a chip type, especially the edge computing side of the market. Within these, Advanced Micro Devices, ticker AMD, and then ARM both have strong products in those CPUs, while Nvidia is still the king when it comes to GPUs that are the powerhouse of the AI data centers. But it's also going to drive high-level cognitive functions in those robots. Nvidia's Jensen AGX is specifically designed for robots like Tesla's Optimus. And here I created this table for our Chip Wars video showing which companies are developing those semiconductors for that AI theme, but it works here for robotics as well. Alphabet, ticker GOOGL, has been making news lately with its ASIC accelerator TPU chips used in AI, and is also developing GPUs and edge computing chips that should put it on your list for these robotic stocks. I'll link to that prior video on the coming chip wars and how it affects Nvidia's semiconductor dominance in the description below, so make sure you check that out next. We see here the report highlights Nvidia in the US semiconductors market. While I do believe Nvidia suffers or is at risk to its chip dominance from some of these new types of chips from Google, from Amazon, a lot of these other TPUs and edge computing chips coming over the next few years, it is still going to be the lion's share of this market. I think Nvidia needs to be on your list of stocks to buy if it isn't already in your portfolio. Nvidia's approach to robotics is something the company is emphasizing in a 3-part computing strategy around the cloud, edge, and simulation. Okay, its cloud resources there are, bar none, the best in the industry. It is basing its robotics on this GR00T foundational model. Okay, it's going to start with a vision language action model that adopts a dual system design. Okay, so it's building off of its chips into this large language scale models and into robotics. You can see it starts with the vision approach here, goes into a language model, and then into the robotics action. Okay, that is how Nvidia is going to transform itself from just a chip player into this robotics theme. Not only is it doing that through the GR00T foundational model, that language model for the robotics ecosystem, it's also continuing that chip work, developing the robot brain for the future of autonomous systems through its Jetson family of chips here. You can see some of these chips are already in development for the Tesla Optimus robot. It's going to be expanding these into other types of robots in the future and is really going to, again, dominate these chips for robotics as well as just that AI theme. Within the vision parameters of robotics, Morgan Stanley highlights Ambarella, ticker AMBA, and onsemi, ticker ON, really defining the vision layer of these humanoid robotics. on through its high performance image sensors and power devices that are going to capture and manage that visual data. And then Ambarella through its AI enabled vision SoCs that are going to process, interpret, and optimize the perception at the edge. Here it says Ambarella is viewing robotics as a major long-term growth opportunity, and not just in these humanoid robotics, but in all types of robotics, encompassing applications as the autonomous vehicles, the drone technology, which is huge right now, manufacturing robots, home cleaning machines, into those humanoids. So all which demand powerful domain controllers that Ambarella is going to supply. Says the company expects to begin those high volume shipments of its robotics market products by the end of fiscal 2026. So just about a year out here, has already secured one of the first major design wins with its partially autonomous aerial drones. So again, a huge market there in aerial drones, a market that is already growing and is going to support this even as that it looks to those humanoid drones futures. Notable example here, it says, is collaboration with Arashi Vision on the anti-gravity drone, which is going to feature Ambarella's CV5 AI SoC. It's slated for global launch just this January here in 2026. For its part, ON Semiconductor's leadership in that automotive image sensors, where it holds the #1 global market share, is going to carry over into these robotics. So not only is ON Semiconductor benefiting from the age of autonomous vehicles, but also is going to carry this into the robotics. The company's high-performance CMOS sensors deliver that kind of low-latency, high-dynamic range imaging that is critical for this type of navigation, object detection, and human-robot interaction, while its intelligent power solutions manage the motor drives, the battery systems, and high-voltage actuation within these robots. So it is going to be touching a wide range of the products or of the parts and pieces of a humanoid robot. A stock that has come down over the last year could be in good value territory, a good opportunity here. ARM Holdings, ticker ARM, which the report calls the architecture for the brain. Now, while Nvidia dominates a lot of that AI-specific compute, ARM architecture dominates 70% of the edge AI due to its power efficiency. So ARM has a lead here in some of the most important aspects, that power efficiency that is going to drive these humanoid brains. It's going to demand that processing, cognition, motor control, and reasoning functions that is only available through that power efficiency from ARM Holdings. Says here, ARM's role in power-efficient compute ensures humanoids can scale from those lab prototypes to the mass production. So only with the architecture from ARM is this even going to be possible. Two companies that are going to benefit that you don't hear quite as much about: Synopsys, ticker SNPS, and Cadence Design Systems, ticker CDNS, both going to benefit from that humanoid robotics theme. Humanoids are going to require that custom, compact, and efficient chip designs. Obviously, you have a limited space here. You need to get as much there on the chip as possible. It highlights several key features of Synopsys here, focusing on that chip design AI solutions, automates the chip design process, reducing that design time and the power consumption. Again, very important, the power consumption and the chip design in these works. For Cadence's part, the Cerebus AI Studio going to focus on that custom designed system on a chip. It also says, given Cadence's recent acquisition of Hexagon's design and engineering unit, Morgan Stanley sees it as well positioned in this humanoid exosystem. Now understand, while some of my favorites here, like Nvidia, Ambarella, AMD, and ARM, that ARM Holdings, are all listed on those US exchanges, getting a complete portfolio of those robotic stocks is tough for most investors. 9 of the stocks in this Morgan Stanley Humanoid 25 list are only traded in the Asian markets, and another 3 only in Europe. Fortunately, there are other ways to get these stocks through ETFs like the Global X Robotics and AI ETF here, the BOTZ, and the Robo Global Robotics and Automation Index ETF, the ROBO. I'm going to be looking at both these ETFs, compare them, look at which stocks are included in each, and how you use them to get those exposure into those foreign stocks. Within the Robotics and Artificial Intelligence ETF, the ticker BOTZ here, we can look at the website. We can look at the ETF summary here. It tells us which stocks are going to be held there. Those involved in industrial robotics and automation, those non-industrial robotics, so the consumer and other robotics like we're talking about, as well as autonomous vehicle. And I like this because not only does it involve stocks that are going to benefit from this humanoid robotics era that we're talking about, but also from more the near-term industrial robotics and automation. The fund holds stocks of 50 companies, so very well diversified here. And if we scroll down here, we can see not only the individual stocks, which we'll look at, but also the country exposure. So you have 48% of the stocks here traded in the United States or from US companies, 26% Japan, not 10% Switzerland there, 4% South Korea. It does not have much of an exposure to Chinese stocks or Hong Kong stocks there. Only about 5% of the fund in China and Hong Kong traded stocks there. Might be good depending on your view of geopolitical events, but also isn't going to give you quite the exposure from some of the Chinese and Hong Kong stocks there in that humanoid 25 list. We can scroll back up here to see the individual stocks there. We can see the top holdings. Nvidia, 11% of the fund. That is going to come in very, very much different from this other ETF that we're going to look at. Very important distinction between the two that you're going to want to pay attention to. But Nvidia Corporation, 11%, ABB, 9%. That's the Swiss side of it there. Fanuc, 8.9%. So very much heavily weighted towards these top companies that it is investing in. In fact, I think the top 8 companies are about half of this fund here. So very important that you know which companies those are and what kind of an outlook you have on those individual companies. You can see here it does give you access, though, to some of those companies that you wouldn't have access to as a U.S. investor. Swiss ABB there, Japan for Fanuc, Japan for Cadence, as well as Daifuku. A lot of these I cannot pronounce. I'm not even going to try. But you've got other ones, yes, Yasukawa. See if we can find any of the Hong Kong Ubtech Robotics. So it does give you good exposure to a lot of these names that you're not going to be able to get on the U.S. exchanges. Another option here would be the Global Robotics and Automation ETF, the ticker ROBO. Now, the theme for these is very similar. The theme is going to be for both of these, investing in the companies that create that technology, create a truly intelligent systems that can sense, process, and act, and the companies that are applying that technology. So this core humanoid technology that we're talking about, it is investing in 77 companies, and you can see one of the main distinctions between this and that other, the Global X Robotics Artificial ETF, the BOTZ, is that this company, besides investing in more shares, more companies, so 77 stocks here in this ETF, none are more than 1.8% of this fund. Okay, so 1.8% is the top holding within this fund. Going to be much more spread out across those companies. That means this fund is probably going to track that robotics theme more closely, while the other ETF, the BOTZ, is going to track some of the individual, some of the largest holdings. So those top 8 holdings, it's going to track those much more. And what other themes are those other stocks are following. We're going to see that in a chart here in a little bit. But you can see here the geographic breakdown for the ROBO. North American stocks, 44%, Asian stocks, 33%, European stocks, 23%. You can see here the industry classification. So the types of industries, the robotics industries that this is touching, 60% in the application here, 40% in technologies, the actuation, computing and AI, sensing and integration companies. If we go back to holdings here and we scroll down, we can find the holdings as of December. We can see here it does include a lot of those foreign companies, the Japanese Fanuc, Japanese Fuji Corporation, Teradyne, some of the other U.S. companies here. It does include some of the other ones that we saw on the BOTZ ETF. It does include Nvidia, but you have to scroll all the way down here. 1.3% of this fund is Nvidia. So again, a big distinction between these two funds is that this one, 77 stocks, none are more than 1.8% of the fund. So it is going to track a theme much more than any specific stocks, whereas the other one is going to track more the specific stocks of the largest holdings. We can see here in a 5-year chart of these two ETFs that they track each other almost identically, but they have each had their moments, okay? You can see sometimes the BOTZ here in the green line has fallen faster, but then it has risen back faster again. Sometimes the ROBO has had its moments and has been outperforming. And a lot of that is all coming down to the difference in those exposures and the weights in those ETFs, okay? Like we saw with the BOTZ, Nvidia, ABB, Fanuc, those top 8 stocks are half of the ETF. So this ETF is going to follow much more the future of maybe those 8 stocks, maybe the top 10 stocks, whereas the ROBO is much more diversified across all 77 stocks. So a lot of which one you choose here to prefer if you're looking for that entire industry, robotics and AI industry ETF, is whether you think those top 10 stocks within the BOTZ are going to be the ones that outperform, are going to be the ones that you want that extra overweight exposure in. Don't miss the video on the right, how the coming chip wars challenge Nvidia's dominance in semiconductors and the stocks to buy now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.